Hey there, stock shepherds. Lee here. Ready to guide our financial flock to the greenest pastures this week? Buckle up and bring your humor, folks. We're about to take a thrilling ride on the Wall Street roller coaster. Ready to weather any storm, folks? Our first stock on the list is Weatherford International. As the name suggests, it's sturdy. This stock is dancing to an uptrend tune on the Nasdaq. Get this, the expected EPS change for Q3 is a whopping 1,129%. If that's not a high note, I don't know what is. Just like that surprise key change in your favorite song, Weatherford exceeded earnings expectations by 14.5% last quarter. And talk about being popular. There's strong buying pressure with an up/down volume ratio of 1.3. It's like being at a concert and everyone's shouting encore. Lastly, it's trading 21% above its 50-day moving average. That's the rockstar of stocks for you. Ever heard of a tech stock that's as steady as a Swiss clock? Meet Roper Technologies. Just like a kid gobbling up candy, Roper experienced a sweet 19% EPS change last quarter. And it's been on a sugar rush for a while now with an EPS growth rate of 17.8% over the last 3 quarters. In terms of sales, it's like a baker on a roll, with a 15% increase in the last quarter. And debt? It's got less of it than a frugal grandma. The debt-to-equity ratio is at a low 37%. It's flirting with its 52-week high, being only 1% off. Roper is indeed the Hopar of our stock picks. Get it? Let's add some Latin flair to our list with our next stock, YPFSA. This Argentine beauty has been dancing the tango with impressive figures lately. The EPS last quarter cha-cha-cha'd its way up by 43%. If that's not rhythm, I don't know what is. It's not all about the dance steps, though. The music matters too. And with a 3-year sales growth rate of 22%, the melody is definitely catchy. Speaking of catchy, how about a pre-tax margin of 2,128.1%? That's a number that even a football score can't compete with. Debt? Just like the Argentine tango, it's moderate and controlled, with a 59% debt-to-equity ratio. And this dancer is definitely on its toes, trading 14% above its 50-day moving average. YPF, you've got the moves. Have you ever wished you could see the synopsis of a perfect stock? Well, wish no more. Presenting Synopsys Incorporated. This tech wizard just saw a 2% EPS increase in the last quarter, like adding an extra espresso shot to your morning latte. But here's where it gets exciting. The projected EPS growth for the current quarter is a frothy, creamy, delicious 50%. And debt? Zero, zilch, nada. It's as clean as a fresh whiteboard at a startup meeting. Currently, it's strutting on the stock market runway, trading 8% above its 50-day moving average. With a market cap of $69.1 billion, Synopsys isn't just a player, it's the whole dang game. If stocks were movies, this would definitely be a blockbuster. Last but definitely not least, we have Fabrinet. Now, you might be thinking, why does it sound like a fabulous internet? Well, because its performance is indeed fabulous. Just last quarter, this stock buffed its EPS muscle by a whopping 29%. Can you imagine gaining muscle that fast? Well, we're not done yet. This stock isn't just about the sprints, it's got stamina too, showing a solid 3-year EPS growth rate of 28%. In terms of sales growth, it's up by 18% just from the last quarter. Debt? Fabrinet laughs in the face of debt with a debt-to-equity ratio of just 1%. And like a true star, it's trading 16% above its 50-day moving average. Fabrinet, you sure do live up to your name. Love the vibe? Click like. Want more of this stock-picking fiesta? Subscribe. Want to be the first to the party? Ring that bell. Before we wrap up, let's have a quick tip session. Have you heard about the 10-20-10 strategy? No, it's not a football formation. It's a strategy where you invest less than 10% of your equity in a single position. I know, sometimes the stock is just too tempting, right? But hey, the risk is also real. Once the stock hits a 20% gain, you take your profit and do a victory dance. But if it drops by 10%, you stop the loss and retreat. Remember, in this game, we need both a safety net and a victory flag. And if you've got any questions or stock picks you'd like me to cover in the next video, leave a comment below. I'd love to hear from you. Till next time, keep investing, stay safe, and let's make some money together. Well folks, that's all the sheep. I mean, stocks, we have time to herd today. But don't worry, with AI Stock Shepherd on your side, you'll never miss out on the latest and greatest in the world of trading. Remember, investing isn't just about winning or losing. It's about enjoying the ride, learning from both your gains and losses, and always looking at the bright side of your stocks. Keep on laughing, learning, and investing, my friends. Until next time, this is Lee, your stock shepherd, signing off. Stay profitable.